Welcome to This Week in Money. I'm Jim Goddard. Today, Trends Journal newsletter publisher Gerald Celente on hot trends in the new year. Inc. Research CEO Ted Dixon says mining insider sentiment remains positive. American Manganese President Larry Reaugh on the challenges of attracting investors back to the juniors. We'll talk to Gerald Celente right after this.
Blue Christmas, the king of tributes, Randy Elvis Frisky and his spectacular show band, Christmas classics, rock and holiday favorites, and the gospel music of Elvis Presley. Saturday, December 7th, Abbotsford Pentecostal Assembly. Tickets at ontourtickets.com. Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is Gerald Celente, publisher of the Trends Journal newsletter, and I love your slogan, history before it happens. You win awards for it. So maybe let's just jump right in and ask, what are the top 10 trends you look to see in the new year?
Well, I can't tell you all top 10 yet. We're still putting them together. But one of the big ones, a couple of them, populism. You're going to start seeing it raging throughout the world. And that's a term that they use divisively, I should say, in the sense that they make it into a right-left thing. And it's really not. What it's happening is, as you look at the facts, the gap between the rich and the poor is widening around the world. And if you were to say that in the United States maybe 15 years ago, you'd be called a communist. But if you pick up the Financial Times a week ago, you'll see that both parties are now talking about the gap between the rich and the poor and what has to be done to solve the income inequality. And that's a global phenomenon going on now. Few have a lot and a lot have a little. And when people lose everything and have nothing left to lose, they lose it. And other things we're looking at, of course, on the economic front is the big issue of tapering. But it's not only a United States issue. I mean, look what's going on now with China as their lending rates are going up. And they're fearful of a slowdown because if they don't get more cheap money going into the system, how are they going to keep propping it up? They can't. Same thing in the U.S. What's going to happen when they start tapering? The only reason there's any so-called recovery at all is because of the record low interest rates. So right now they're doing exactly what they were doing back prior to the panic of '08. And they're giving people, again, if you want to buy an automobile, 0% interest, no verification needed. And they're building another bubble as well with the real estate market in the sense that you have interest rates, at record lows. But you see what happens when the interest rates start ticking up. When they went up 100 basis points, new mortgage applications went way down and banks started laying off people. So it's going to be a tricky issue with this tapering. What we're saying is we believe they're going to taper because they're going to have to. And they'll come up with another scheme to put money into the system, but not the tapering scheme. And when tapering goes on, the economy goes down because when tapering happens, interest rates are going to go up. And again, this is an interest rate recovery. With interest rates low, you have a slow recovery, if you even want to call it that. When interest rates go up, there's no room for anything other than a downdraft. And, of course, the bond market explodes, as we're starting to see in China.
Looks like China's driving the bus right now.
Yeah, well, they're in a very difficult situation. They're holding on to what, $3.5 trillion worth of reserves, and half of that is in U.S. dollars. And we're watching the dollar being devalued daily by this quantitative easing scheme that's been pushed upon the public. This is unprecedented in world history. No one's ever seen anything like this, whether it's the U.S., whether it's China, whether it's the ECB, now with their minus interest rates that they're going to be offering. They're all pumping money into the system, which again keeps making me bullish on gold.
What about the poor average person? Right now, they're saying it's kind of a 50-50 split. 50% are doing fine. The other 50% are struggling.
Oh, it's more than 50% that are struggling. You look at, for example, here in the States, median household income has declined 8.3% since 2007. That's phenomenal decline as the cost of everything is going up. So And then you look at the data as well. It's the 1%. And again, you'd sound like a communist or a socialist saying this years ago, but the facts, the data stands on its own. The 1% are gaining all the momentum and gaining all the dough. You have in the United States 400 people. 400 have a net worth of $10 trillion. Why, that's bigger than the GDP of Canada.
Wow.
Yeah.
400 people.
Yes.
Now, does that give a case for the Chairman Maos of the world to say, let's go eat the rich?
That's what I'm saying. That's where you're going to start seeing this populism trend really developing. And, of course, they're going to call it right-wing. And they always do. It has nothing to do with right-wing, left-wing. It has to do with pragmatism. As well with the immigration and migration issue. You have people leaving countries because they can't find jobs. And it's not only, leaving African nations or third world nations. I mean, they're dumping out of, Ireland, looking for jobs. They're leaving Italy looking for jobs. So it's not, and then you have the problem of immigration coming in, where people are coming from nowhere, wanting to go someplace, and you have no more jobs for them. So they make it into a political issue in terms of right and left, or good and bad, but it really comes down to pragmatism. In the United States, they had very strict immigration rules following the Great Depression. I mean, you had a lot of people out of work, no jobs. You're going to bring new people in and then undercut the wages of the people that are already here? So they didn't allow it to happen. Now you have the biggest proponents of immigration in the United States are these companies like, the guy that's pushing it out loud, this Zuckerberg from Facebook. So they could hire the cheap H-1B visas, Indians and other skilled engineers and high-tech people from countries that are very poor and pay them very low wages. National Association of Manufacturers, the Chamber of Commerce. It's all about keeping wages low and boosting profits. Again, if you started talking like this 10, 15 years ago, you got a communist on the other end of the phone, No, this is the way it is. The people here don't have jobs. Look, 95% of the jobs created in the United States in the last year have been temporary jobs and or jobs that are not paying living wages. That's a fact.
Well, you have all these big companies like McDonald's making billions, yet they're paying minimum wage to their workers, and a lot of those workers have to collect welfare, i.e. tax money, to survive.
That's right, food stamps and other benefits. And the same thing going on across the spectrum. Look, this is not globalization. And that's a kiddie word that they use, try to make it look legitimate. It's multinationalization. The multinationals have taken over everywhere. So every Walmart that you see, there used to be maybe in that city or area, a couple of hundred mom and pop shops that no longer exist. What are you going to open up in retail? You can't compete anymore. You're going to open up a shoe store? You're going to open a clothing store? What are you going to open up? You can't compete. You're going, I got it. How about opening up a stationery store or a hardware store? You see, there used to be laws in place. They were called the Sherman Antitrust Act, the Robinson-Patman Act, the Clayton Antitrust Act, among them. And in the banking sector, of course, Glass-Steagall Act, so that the bigs couldn't grab everything. But really beginning with, to some extent, Richard Nixon, but really accelerating under Jimmy Carter, who everybody here in the United States loves to look at as, that wonderful peanut farmer. Yeah, he's the guy that started putting it all in the hands of the bigs by deregulation. You can see what happened when they deregulated the airline industry. Why, when I was flying back in the 70s, there was something like 150 airlines in the United States. Now you have two majors. You just saw the merger of U.S. Air and American, and you have United and Delta. Everybody knew it was going to happen. They had these strict regulations in place that were really keeping service high and prices low. And so they deregulated, put it in the hands of the few. And they've done it across the board. So nothing is going to change until, and again, people are going to have lousy jobs. What are you going to become? A store manager at Staples? How about you be a good servant and you'll get a manager at Home Depot? Yeah, I know you used to own a hardware store, but so what? Get back to work. So that's what's going on. Slavelandia around the world.
Wow. So it's not just a case of outsourcing jobs. They say, sure, you can have those same jobs here, but we're not going to pay you anything more than you get in India.
Exactly. And they've done it. And it's also very important to look at it in another light, in the sense that not only are they lowering wages, they're lowering benefits. And not only are they lowering benefits and pensions, people are working longer. But not only that, what they like to call hedge funds and private equity groups, these are corporate raiders in the old days. So everything is in the hands of a few. And you look at the number, you look at these chains. I mean, I was just reading where, TGF Fridays, they're going public, or they're trying to sell it or something. And I'm reading this company has like 177,000 employees. And I never heard of this company. I mean, I heard of them, but nobody would hear of them if you didn't study this stuff. And so that's what's going on everywhere.
Well, there's one just down the road for me.
Yeah.
I've never been there, but...
No, of course not. I mean, unless you want to eat corporate GMO, pesticide-laden foods, you'd have a wonderful time there.
If you're investing somewhere right now, where would you put your money?
Speaking only for myself, because I don't give financial advice, I'm invested in gold and real estate. But the real estate that I'm buying, I bought in Colonial Kingston, where our headquarters are, Colonial Kingston, New York. And I bought 3 pre-Revolutionary War buildings on the most historic corner in the United States, the only place where there's a stone building that predates the Revolution. So I do it for different reasons, and so that's what I do. But I'm not a speculator in the stock markets, and I certainly wouldn't be buying bonds now. And now you're seeing, again, a whole new speculation going. Look, the NASDAQ just hit 4,000. Everybody's cheering. And you're seeing all these, it's again, it looks like a dot-com bubble all over again. One after another, companies that are not making money and that are being offered $3 billion and going public and going at these very high rates. And then you see the whole Bitcoin thing going on. I was just going to ask you about that. I mean, I don't know. To me, it doesn't. It reminds me of the dot-com craze. I'm having trouble putting my hands around it, my head around it, when, I could be 100% wrong. I'm not saying I'm right. I'm having difficulty understanding it long term. And it's the kind of thing, as we saw before, where now is where, the prices are 1,000 plus, minus give or take. This thing could go down to 300, 400. It could go lower. It could go higher. It's too new to know, is the way I look at it. It doesn't have enough shelf life. Now, if you're one of the people who bought Bitcoin at 10 cents a piece, and it's worth 1,000, obviously it's going to turn out pretty well for you. But if you sell it. Yes, but we all know, too, that when things start to reach an interesting peak, and I always think $1,000 for anything is kind of where you go, ooh, is that really worth it? Or just a lot of people put money in hoping it'll be worth it? Again, you could say a Bitcoin toss. I don't even know if it has a heads or tail. Yeah, exactly. And so I don't know. Matter of fact, we're going to be doing a major story on it in the Trends Journal, which will be out in a week on Bitcoin's future, and it's being written by our senior editor who knows a lot more about it than I do, Alex Silberman. So I'm going to rely on his take for it. As I said, I just don't have my head grasped around it enough to really, make a firm call on it, as I would do. For example, I think we're going to have some kind of real deep financial problems coming March, because that's when I can see the tapering unraveling, or going into play around January, and then seeing the implications of it. So I feel more comfortable with something like that I could have a lot of data behind it to support it. Where Bitcoin is, it's all air. It's true in the truest sense. It's a digital currency. It's in that whole cyberspace. Well, people put lots of money in, and like you said, it could be like the tech com crash that we saw a few years ago.
It sounds good in theory, but again, we know theories don't actually drive us to work.
Again, this thing's too new for me. It just doesn't have the foundation. Again, there are some people that I respect very highly that think it has, it's great and it's going to go much higher. So I'm not arguing with them. I just don't know. But again, as I said, it's too new for me.
China says it's going to stop using the U.S. dollar for trade. Is that harmful for anyone or good for China?
Well, it's going to. China's in a tough place. They're saying that, and what are they holding? As I said, about $1.5 trillion worth of dollars in their reserve currency, and they can't afford to see the value of the dollar go down because then they lose their investment. So they may be talking one way and doing another thing, but China, again, they have serious problems. They have a huge crisis in that their interest rates are going up, and their debt levels are enormous, and I don't know how they're going to get out of it either. They're just another Ponzi scheme, as I see it, whether it's the ECB, the U.S., or the Chinese government dumping money into the systems to keep them going. So China could talk a game of backing out of the dollar, but I don't know if they have the wherewithal to do so. And let us not forget, China needs the United States to buy their junk. And if the United States and Europe don't buy, China doesn't make. And if China doesn't make, Canada, Australia, Brazil, Bolivia, Chile, and all those natural resource countries, they don't have a lot of stuff to sell to the Chinese, the Indonesians, the Vietnamese, and other countries that are low manufacturing-based outlets for those natural resources. So everything is in a cycle, and when you talk about China dumping out of the dollar, it's a vicious cycle. It might come back to bite them.
What about 3D printing? Is that going to be the end of centralized manufacturing?
I doubt it. I think it'll have its place, but I don't think it will replace. Not at this point.
Boy, Jay Leno getting a new engine block or something for some old obsolete sports car. That looked pretty impressive. But
it is. And again, maybe to some extent it will, but new things will be developed and new directions will be taken. Again, it may happen. It's kind of like in the Bitcoin realm, in the sense that it's too new to know.
Will we see social unrest because of this growing divide between rich and poor?
Well, exactly. That's what I was saying. Populism is going to be the big trend, particularly in Europe next year. That's going to be one of our top trends. Oh yeah, the people have had it. And you can see what the reaction already is here in the States. For example, they're arming rural police and cities around the country with military hardware taken from the Iraq War and the winding down of the Afghan War, with these massive armored vehicles and weaponry that you could go through the Battle of the Bulge with unscathed in today's times. So I really believe that the police and the governments are gearing up for very difficult economic times and a lot of social protests coming about in the very near future in a country near you.
Wouldn't it be cheaper to just give people what they need instead of stocking up on very expensive military hardware?
Well, you're being rational. And that's
sorry for that.
You could have said the same thing about bailing out the banks.
Well, Iceland had the right idea. They bailed out the homeowners who were about to lose their homes, and they jailed the bankers who put them in that position.
Yeah, but not in the good old USA.
The bankers still calling the shots. How could you change that?
Well, you can't change it through the system. You need a new system. And the way I look at it, I don't believe we should have political parties in any government. The politicians are supposed to be representatives of the people, not representatives of the special interests that are narrowly defined by their political ideology. So once we have a free system of free people representing the free people, to me that's the only way. Or the Swiss system of direct democracy. Let the people vote. They just had a referendum over there whether or not to put a cap on executive pay. The people said no. That was their choice. If they don't want to put minarets up, They said, no, we don't want them up. It was the people's choice. Look, I mean, it's one of the richest countries in the world, if not the richest country, and they haven't been into a war since, about the 1850s. So they must be doing something right.
Sure. Their biggest battle use is they're the guards at the Vatican. That's the Swiss Army. That's what they do. And they make terrific watches and knives.
That's right.
I said my Swiss Army watch, my favorite feature is the corkscrew, which, of course, is a joke. So should we be saying a Happy New Year or semi-Happy New Year?
I would say Happy New Year in the sense that the future depends on each of us. And when the people change and find the courage within them to change within themselves, then the whole systems change. And that's the way I believe it anyway. And my motto at the Trends Journal, think for yourself. But to me, it's not going to take a leader that's going to make the positive change. It's going to take the individual. And when the individual is in touch with themselves at any level, the spirit, the mind, and the body, that's when everything changes.
Well, when you said get rid of political parties, gosh, it would be those political parties who would fight like hell to keep it.
And again, they're not invincible, hardly. Look at them. Look at your guy over there in Toronto, unless you think he's invincible, that mayor over there. And unless you look at the United States people, whether it's Obama, Clinton, Bush, if it's Pelosi, Reid, or McConnell, or Boner, I mean, they invincible? Not in my eyes.
Well, we'll find out. We always want to find out what's going to happen before it happens. And if you want to stay on top of it, I guess you should be reading the Trends Journal. Gerald, is there a website people can go to find out more about the Trends Journal?
Yes, there is. It's trendsjournal.com, trendsjournal.com.
Thank you very much for chatting with us.
And thank you.
Coming up, Ted Dixon on This Week in Money.
Always consult your investment professional before making any investment decision.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is Ted Dixon, CEO of Inc. Research. Welcome to the show, Ted.
Well, it's great to be back, Jim.
Well, today we're going to take a look at some insider sentiment, and we're talking about legal insider, the people who are in these businesses. We'll talk about mining, Canadian oil and gas, and financials. In some sectors are doing very well, others not so well. Well, let's take a look at what's happening in mining right now. People up or down about it?
Well, the insiders were buying quite substantially in the spring. When I was on in late June, we indicated that insider buying had basically gone through the roof, and that turned out to be a near-term bottom in the mining stocks. They had a nice recovery in the summer, but now as we head towards the year-end and some of the inflation data becomes less helpful, the stocks have been falling and the insiders have been buying again. The one major difference between now and June is that the buying is not as intense, so there is a little bit of hesitancy amongst insiders right now, and we would think that the poor inflation data coming out of Europe and the U.S. is probably something that's having insiders hold back a little bit of their powder here, because we're just not quite sure how this inflation story in North America is going to play out, and that will have a big impact on the fortunes of the mining group.
It's interesting that governments in the past have said we want to keep inflation under control and keep it under 2%. Now they're doing their best to boost it.
Well, one has to wonder if that's the case. That's what they say, and that's what they would have us believe. But the U.S. has been targeting unemployment. They've been targeting housing, but at the same time, through their so-called money printing process, they've actually been piling up a lot of bank reserves in the banking system that are just sitting there doing nothing, which the U.S. Federal Reserve pays interest on. So it's not entirely clear that this policy that they've done in the U.S. Called quantitative easing is helping their inflation cause. In fact, over the last 2 years, inflation has been dropping in the U.S. while housing has benefited. So that's been good for the forest industry in Canada and BC, as they've been able to sell more lumber products into the U.S., but it's been very bad for the miners who've had to deal with falling gold and other commodity prices.
A study done at SFU found that they expect commodity prices to keep on falling for the next few years because every country in the world is trying to export raw products, but none of them are really expecting to import a lot.
Right. There's the supply and demand issue that will be very dependent on global growth, of course, but there's another factor that gets overlooked quite a bit, and that is real interest rates. There's a good correlation between real interest rates and commodity prices, and it's a negative correlation. The lower you have real rates, that is, the interest rates that are paid on bonds or, more importantly, treasury bills, minus the inflation rate. So the lower that is, ideally for commodities, the more negative it is, the higher commodity prices tend to go. So what we've been seeing over the past 2 years is an upward pressure on real interest rates, and that is not helpful for people holding commodities. A lot of people will hold commodities if it doesn't cost much to hold them, but as the cost to holding commodities goes up, then the demand goes down. So we have these supply and demand factors, as you point out, but a lot of it also relates to the ability of these commodity players to hold in inventory their levels of commodities, and the more expensive it is for them to hold these commodities, the less they're going to hold and less they're going to buy, and the less upward pressure there is on the price. So it's been a bit of a downward spiral here. It's been a slow spiral, but still very painful for those investing in the mining group.
And yet mining stocks, people keep saying they're so affordable right now. Nothing could be, more in a buyer's market.
Well, that's a good point. We put out a report on last weekend that compared the price to book ratio of the U.S. market, which is about 2.4, to the typical gold stock in Canada, which is less than 1. Now, over the long term, we would expect that to reverse, that there would be a reversion to what we call the mean, to sort of normality, where the U.S. price to book ratio would come down and the gold mining stock price would go up. But that may take months, years to play out. So we are looking at quite a difference in terms of value between Canada and the U.S., where the Canadian mining companies offer a fair amount of value for those who are patient, can pick the right companies with good management, and can ride out the short-term volatility. The U.S. very expensive, but it's not hard to find an article on the internet these days to say, well, they're not that expensive because in 2000 the price to book ratio was much higher, it was around 3 or whatever, and so there's room for it to go. So when you've got that kind of momentum talk driving market, and you have institutional players who piggyback on that with their high frequency trading, in the short term, the ride could be very rough over the next few months, particularly for those who are looking to buy on value, because they're going to have these crosswinds that are really just a speculation and driven by momentum trading.
Ted, let's take a look at what's happening with the financials. You said there's two different journeys taking place right now.
That's right. The Canadian financial sector is split up basically between, I'll call it the banks and asset gatherers, and then there's the REITs. So the REITs being real estate investment trusts, very popular with investors over the past few years who've been looking to boost their portfolios with yield. The REITs had a very good run, but it all sort of started to peter out about 2 years ago. Again, kind of as the inflation rate started to roll over in the U.S., and the effectiveness of quantitative easing started to become more questioned. And the REITs have got a different dynamic going on with them than the asset gatherers and the banks. The REITs really like low long-term rates because that reduces their costs of financing their apartment buildings and factories that they buy. However, the banks love kind of long-term rates so long as short-term rates are low, because they can take your deposit, Jim, and pay you a small amount of money on it, and then they can go and loan it out to maybe, for example, a real estate company at a higher rate. And so the bank is quite happy with that kind of a situation with higher long-term rates and lower short-term rates. But the REITs aren't so happy with that kind of a situation. They would just like to have lower long-term rates. So the REITs had a nice run for a couple of years off of 2009 when the Federal Reserve started its bond buying program and was quite effective at keeping long-term rates low and pushing them lower. But as people who are familiar with the bond market, noticed over the past year, and especially the past 6 to 9 months, the bond market has been very volatile as investors are questioning the effectiveness and the ability of the U.S. Federal Reserve to keep long-term rates low. So what we've seen is insiders are bullish in the financial sectors but for two different reasons. You've got the REIT insiders who have been buying because their REITs have been hit so hard over the summer that gets back to sort of like a value play we were talking about with the mining stocks. They look for the longer term and believe that, okay, this is a bit overdone. We've got good value here. Our real estate assets are still worth quite a bit of money, and if inflation comes back, we'll get a bump probably on our asset values, and everybody's kind of factored in these long-term rates. So that's more of a value play, a long-term play for longer-term investors who again can ride out short-term volatility. And if you believe that the long-term rates are going to be relatively well behaved from here, the banks and the asset gatherers, they're bullish because they kind of like the ride and they don't see it ending quite so soon. And while we have seen some insider selling in the banks and in some of these groups, it's been very, very muted compared to what we would expect to see. The financial stocks have been one of the best performing areas in the Canadian market, and insider selling in the group is very restrained given what we would expect after such a ride. So it sends us a signal that, look, there's lots of money here to be taken off the table. Insiders are not quite doing it yet. So there may be a little bit more to go on the momentum ride for the banks and some of these asset gatherers who would benefit from a little uptick here in long-term rates, so long as the short-term rates stay quite low. And as we've been hearing in the market for the past few months, the U.S. Federal Reserve and the Bank of Canada is going out of its way to say, we're never really going to, we're not going to raise these rates for a long, long time. And even if unemployment goes down and the economy picks up, you had this amazing report from the Bank of Canada a couple of weeks ago saying that just because the Canadian economy might move to full employment doesn't mean we necessarily are going to move to normalized rates, which I thought was just an astonishing thing to say. But that's the kind of world we live in, where central bankers are paranoid now of deflation, and it doesn't strike me as they quite know what to do about it.
Former Bank of Canada Governor Mark Carney is in Britain now running their central bank, and they just announced that they plan to stop their promotion of low mortgage rates. They feel the market there has stabilized enough that maybe they need to be exposed to what I would call a real interest rate and not one just cooked up at a central bank.
Well, as we all know, Mr. Carney was here in Canada for a number of years, and under his watch, housing prices in Canada went up quite a bit, and Canada now has one of the more expensive, if not the most expensive, housing markets in the world. So perhaps Mr. Carney has learned a thing or two from his tenure at the Bank of Canada, and doesn't want to see another bubble happen on his watch.
Ted, is there a website people can go to check out the background of your company and maybe some of the things you're recommending?
Sure. Our website is inkresearch.com. That's where people can do a 2-week trial for our paid subscription, or there's a free service at canadianinsider.com where you can go and take a look at insider filings for all Canadian companies.
After the break, Larry Reaugh on This Week in Money.
Blue Christmas, the king of tributes, Randy Elvis Frisky, and his spectacular show band, Christmas classics, rock and holiday favorites, and the gospel music of Elvis Presley. Saturday, December 7th, Abbotsford Pentecostal Assembly. Tickets at ontourtickets.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Larry Reaugh, President and CEO of American Manganese. Welcome to the show, Larry.
Well, I'm glad to be here, Jim.
Today, we're going to be taking a look at the tough struggle that the juniors are facing in a very difficult market. Very hard for them to raise money, to explore, try to find new resources that keeps Canada's economy rolling along. Larry, what do you think we have to do right now to maybe brighten up the picture?
Well, the first thing is you have to look at is survival of the company. That's utmost. You've got about a minimum of $150,000 a year you got to spend on doing that, and that's getting the audits done and the quarterlies done, right? Now you get that out of the way, then you can start looking at, okay, can I raise money? Your stock prices are low. Most of us are, which means a lot of dilution for absolutely no reward in the last 3 years. And by that I mean, even if you hit good holes, you were guaranteed you'd go down about 80%, right? If you come out with a good 43-101, you were guaranteed you'd go down 80 or 90% on price. And this is what's been happening, but I've noticed now that there are companies that are starting to respond to good news, and that's a big thing because that hasn't happened for a long time. So what my advice is, we survive, we position ourselves, and we get some loyal shareholders around us. That's exactly what I'm doing. And then we get ourselves ready to eventually go into the market and face a little dilution, but to get enough money going to spark the company. And those companies, and there's a lot of them out there that are trading very low, that actually have pretty good assets. Maybe they're not economic at today's prices, but 2 years from now, they probably will be. So, those companies will probably and should survive. When you just have exploration potential, that's the most difficult area you can be in. So basically, what I'm saying is, if you have a good asset, you've got a good chance of surviving. You can build a business plan around that asset, and you can convince people that it's a good investment down the road. So, my suggestion is survive first. We're going to see a lot of purging over the next few months as the audited financials are due. And but in the same time, like I said, I'm seeing a very large glimmer of hope out there in the market.
I've heard too the past year or so has just been merger mania out there amongst the juniors, because alone it's hard to survive, but maybe 2 or 3 companies, merging together and consolidating resources have a chance.
Well, certainly that's one way of reducing overheads. You get away from 3 audits, 3 corporate governances. You get away from staff that you require that for 3 companies, that you can reduce that hopefully by 60%. Those things all help, but the reality is you got to have at least good projects in a couple of those companies and good money in the other company to really make it make sense.
I've heard one of the key things you should be looking at when you're investing is the management. What kind of experience do they have? And are they really people who have experience in that field, or have they just been brought in to crunch numbers, but they don't understand the resource sector?
Well, this is true. There's management is probably the most key attribute that you'll look for in a company. I've been involved in the mining for over 50 years, and certainly in the public arena for 35 years. And, I've raised in excess of $300 million. But those are past successes. I mean, I've got to keep working, but there's certain things that I know on how to maneuver and everything that probably a newbie coming into the arena would not be aware of. And, so it's, yes, you've got to look at the management. You've got to take a critical look. Is this company going to survive? I mean, there are screaming buys down there. Screaming buys down here.
Sure, I know. I've heard the best bargains in the world are a lot of these junior mining stocks that the company has a good past record. People just aren't putting their money into it.
Well, they haven't been able to make money for the last 2.5, 3 years. There's been a few changes, and one is that we've rescinded the short rule, and that is the big player on the table that has created a lot of shareholder losses, because you don't need a short on an uptick anymore. It's you can short downticks. So that said and done, I mean, that compounds our problem. Certainly it's not the commodity prices. Commodity prices haven't dropped that much, but people kept banging on those for the last 2.5 years. So, I started a newsletter back in 2008, and I haven't written a letter on it. I wrote about a half a dozen called The Fundamentals of the Metal Market. And I had a good following, or have a good following in that. And I predicted that the 2008 would come back rapidly, that drop, and that there were screaming buys out there. You saw tech down to $4, remember? You saw companies that are now trading in the, traded at $12, $15 that were trading down at 20 cents. There were just some screaming buys down there. That's what we have today, except it's been a grind. These companies have been ground down. They haven't, there wasn't a rapid fall like we see most of the time. So, consequently, we're back in that period of time where now it's time to step up to the plate. And if you're looking for a good buy in a company, look at the management, look at the project, and look at their ability to raise money. That's three key things that you should look at if you're looking to buy stocks in a company right now.
More with Larry Reaugh next on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're chatting with Larry Reaugh, President and CEO of American Manganese. Larry, has the relatively new Canadian National Stock Exchange helped the resource sector?
The
CNSX.
Well, that will certainly, bring down the costs to maintain your company per year. But it's not going to change the ability to short the stock. That won't change. It's across all exchanges. And, certainly I'm looking at that. I think anybody that qualifies would be a smart move because we're not seeing any breaks from the TSX Venture Exchange as far as costs go. And so they can't because they're losing listings, right?
And I've heard, too, regulation is strangling the business. Once you pay off all the lawyers and have auditors go through everything, about 3/4 of the money you raised is already gone.
Well, this is it. Prior to this meltdown, we did a large drill program. We did a pre-feasibility on American Manganese. And it was unfortunate for us. We were caught in this downturn. And at the same time, the price of the metal that we had was, dropping. So, but the reality is the cost of doing that is in the tens of millions of dollars. It's not like it used to be back in the 80s where if you had $1 million in the till, you could spend almost 75% to 80% of that on your project, right? Now, if you got $1 million in the till, you're lucky if you get $300,000 or $400,000 for the project. So that's the difference in what the advantages and disadvantages are from before till now. And this regulation is sure. I think everything should be regulated. I have no problem with 43101s, but when it's, semantics and everything else, it doesn't necessarily stand to reason that, we, have, I guess, what you would call,
an open market that's ready to take your money and invest it wisely.
Well, this is it. But I think, that there is there is an entry point coming back. Unfortunately, we've lost a lot of investors. They've lost their money. And, that subsequently is not going to come back into the market. We're looking more probably for new investors in the market. Some of the investors that were wise enough to see the plunge in the market early in the game, get out, sit on the sidelines, come back into the market. And, but we're probably going to lose about, I think we're going to lose 60-70% of the investors that we had prior to this meltdown.
Larry, is there a website people can go to investigate your company or take a look at some of your views on investing in the juniors?
Yes, they can go to AmericanManganeseInc.com.
Thanks to our guests, Gerald Celente, Ted Dixon, and Larry Reaugh. And thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.